Look at the next one. Right there we have a bullish example. So let's have a look. The market is trading to the downside and we potentially have a double bottom because the market is failing to break below. Okay, then we have that little push to the upside that we're still not really looking to trade. Then we have a little pullback that could potentially be a higher low. Again, remember how I explained actually double tops and double bottoms? We always have that little pullback before the little break, the big break, sorry. Okay, so we broke this structure on the left and we broke that structure on the left. This is our retest area. The market retests this area perfectly, and then we can have an entry right there depending on the candlestick formation. And then after we have a bullish engulf, for example, or an indecision, a rejection, whatever you perceive to be an entry for you, then you can definitely take the trade. So this is another type of of an entry pattern. So let's have a look at the real example right there. So the market pushes into the highs, fails to break below with this wick, then creates all of that consolidation. Then we push lower, and this is actually creating a higher low right there because it didn't reach that low right there. This is our major low. Then what happens? The market pushes up a little bit, but this is not a clear break, as you can see, because the market didn't close with a body above this wick. We pull back a little bit, which could be our potential higher low, and then we strongly broke above, which is actually a clear break of structure. Then where is our retest area? It's exactly right there. If I'm to actually screenshot this one in order to draw, just give me a second. Yeah, so right now, actually, after the structure is broken, this is our major higher low because this one is right now confirmed. Then we have a pullback, which is exactly on the retest of that structure. Strong bearish engulfing candle right there, but then we have a bullish engulfing candle. So we enter with an instant execution right there. And eventually, you would like your stop loss to always be below the structure, below the previous low, higher low. If you enter with a buy stop, you can place your buy stop a little bit above, something like this, and then you can make your stop loss right there. Why can you do this? Because you believe that this will be your higher low before it's created. Okay, so you have this bullish engulf, and maybe you can enter in this candle, but if you already enter in that candle, then momentum is kicking in and you should be expecting a higher high, right? So you can place your stop loss just below this area. And again, all of those entries you can examine on your backtesting sessions and figure out which kind of entry criteria works best for you. Okay, so this is an example with a double bottom. Let's have a look with another one. So this is actually a conservative entry with stop order. So let me show you how you can enter with buy stop and sell stops. Okay, so what do we have right there? We have a downtrend, lower highs, lower lows, lower highs, lower lows. Then we have actually an MSS formation. We have a market structure shift to the upside. The market breaks the structures on the left. What do we look for? We look for a pullback or for a retest, of course, but are they perfect? Not really. Then we have the pullback. This is your potential higher low, okay, and it forms a nice candle of rejection, bullish engulfing candle, morning star formation could be pin bar, indecision doji, whatever you like, okay. And then we potentially set our buy stop. So make sure you're of course aware of what sell stops and buy stops are. I really hope you are. This is basically a buy stop is an order above current price. Okay, so we set our order above right there, and when the market crosses that line, you're gonna get entered into the trade. Right there, we have a nice downtrend, lower highs, lower lows, lower highs. This is a lower low. The market pushes, fails for a bit, but then we actually close above, and we continue to push above to create a higher high. Then what we look for is for a higher low, and if you again look carefully, you have that minor structure right there. Have a look at that push to the downside. That creates wicks. So this is potentially most recent structure. It got retested, but what is the retest is a very strong bearish engulfing candle. So you don't want to base a trade on that one, but you're still looking for an entry. So what you can do is when the market is actually closing right there, you can set a buy stop above that candle. I really hope that makes sense. So you have the market pushing down. Imagine that the market is still there. This candle, this price action hasn't printed. And then you actually set your buy stop above this candle. So when the momentum kicks in, you get into the trade. And as you can see, your stop loss is below that structure because then you believe that this will be the major higher low after the market actually breaks. Really hope that is clear. If it's not, you can always reach me out for questions. Okay, so this is our stop order entry, potentially. And you should also do this once you have that such a strong pullback, okay? And you're like, okay, let me see. But most of the times you're gonna have another candle down there, potentially an indecision or rejection that you can base an entry on. But I always like setting stop orders as well because they ensure momentum and they ensure that you actually get into the market. Because what's going to happen if you enter in this candle and then the market just continues down? You get stopped out. But if you set a buy stop, then you go with the momentum. All right. So that is pretty crucial. And our final example right there. Let's have a look at just a nice example and to maybe actually break this down on my favorite whiteboard. All right. So let's have a look. What do we have right there? So this is a high, we have a push to the downside, this is a lower low. The market pulls back, creates a lower high, continues to push lower, but what happens? It fails to break structure, okay? So we start to shift to the upside. So this is a potential hard low, but we haven't broken yet. We push up a little bit, we push up, we create some sort of structure, the market tries to break below the structure, it fails. And then we actually break above. So this is a first confirmation of a hard high. You can say, okay, but the market did not break that structure. That is fine. If you're always looking for breaks of structure like this, that is absolutely perfectly fine. But on this occasion, I'm really focusing on what the market is doing right now and what kind of structure is it breaking. So we have that push, little pullback. This can also be a hard high right there. Then the market pushes lower to tap into this structure and creates actually a double bottom, you can say, right? And then we actually break structure and introduce some sort of momentum. Then what we should be waiting for is for a potential pullback, retest. I don't see a clear structure for a retest. So usually when you're looking for a retest, you will be seeing the market push a little bit higher so that you have a good space for the market to potentially pull back and go. While with this example, the market just broke above, closed above, which is important, and then immediately dropped down. But what do we have? We have a morning star formation. Beautiful example. Bearish engulfing candle, big rejection candle, and a strong bullish engulfing candle that engulfed even this bearish one right there. But what you can do, once this candle was set up, you can set your buy stop just above it, and then your stop loss goes just below this candle because you believe that this one right there is gonna turn into your major hard low, because this is a hard low, this is a hard low to potentially go for a hard high. You get triggered with momentum, okay, and then you can see we skyrocketed to the upside. You can of course also enter in this candle after the morning star formation, and you can of course place your stop loss still below the structure. No need to place it right there. If you want to be conservative, you can always place it right there, but currently this high low is already getting formed. So if this is gonna work, then that's your stop loss. If it gets hit, then you're potentially not having a long trade, and you're gonna have sometimes examples like that. And this is our final example for the conservative entries. Again, you wait for a candle close right there, always. And you're gonna see with backtesting sessions that you can constantly combine conservative and aggressive entries, because sometimes the market is perfectly setting up for conservative, but sometimes the market is perfectly looking like aggressive. So right now, let's have a look at the aggressive entries, and then I'm gonna give you a little bit of a summary.